I've nominated stock of the day being Iress because you couldn't look past the share price move today. I will timestamp this and just saying that Iress shares are still up by 9%. So it comes even as it poured cold water on reports in the media that Barrenjoey, so you know that investment bank that everyone's talking about, is on the hunt for as much as a 10% stake in Iress shares on behalf of a client. But in a statement to the market, the company says that it has not received any direct approach and that it is not in a position to comment further. So again, shares were up higher than this 9.25%, but still, that is a big move for Iress on the day. Ben, I'm going to start with you because we were having a bit of a chat yesterday after the close about some of the M&A activity that we're seeing, you know, in the tech space, generally speaking. I mean, Iress is not pure sort of infotech, but it plays in that space.
Yeah.
So first of all, on this rumor in the financial pages today, I mean, it's completely plausible that somebody's looking to take a 10% stake, correct?
I think there is definite truth behind this rumor. I think, you know, it seems quite factually based. Apparently fund managers were rung up last night sort of saying would they be willing to sell some of their stock. You know, so there's a raid on. And Iress has sort of said we don't know anything. It's because they don't probably know anything. Yeah. This looks like another potentially more hostile sort of attempt to have a crack at Iress. It's an interesting business, Iress. It doesn't get discussed a lot. It was sort of probably one of the first tech businesses that actually really listed on the exchange. And we know the business really well because we use it every day.
As do we.
As do you, and you know, as Carl does probably as well. You put it in the much more mature category that has been struggling to find growth. It's battling some headwinds, particularly with a lot of advisors leaving the industry and turning off Iress screens. But it's got a really good wealth management. It's kind of got, you can see what an acquirer could be interested in. It's got a UK business which has struggled. It's got a mortgage business. It's got a really good financial planning business, and then it's got a markets business. So, you know, splitting it up, dicing, maybe it's a private equity player.
Do you own any Iress? Have you owned Iress?
We do own a bit of Iress.
Okay.
Not a great deal, I would say, but it's one that's long looked interesting and looked cheap, but there's never really been a catalyst for, you know, sort of a re-rate. And, you know, as I was saying, there is a headwind that's kind of a structural change that is going to happen over the next few years in Australia, where advisor numbers are forecast to potentially even halve. So that's a lot of screens that will get switched off, but it dominates the industry. It's really got no competition, and for the advisors who are sticking around, it's inconceivable to leave Iress. So it's very sticky and can put up its prices pretty regularly.
Carl, do you use your Iress terminal? Do you have an Iress terminal? What do you think of the company?
Yeah, look, actually, I have used Iress many times over the years in my various roles. I don't actually use it now. Look, there are some other competitors. The main, you know, market news and data terminals, probably Bloomberg. Iress has priced itself as a main competitor to that, but with probably similar pricing. And you tend to, it's like the old Ford versus Holden debate, isn't it? And some people love Ford and love Holden. So, yeah, look, Ben, everything Ben said is correct. I think, look, I totally believe that there is something going on based upon the rumours and the share price performance. It doesn't have a huge short sell float. So the first thing I looked at when I saw this huge price jump today, I mean, it got to nearly $13, was there a massive short interest? And maybe that's explaining this huge price jump. And there actually isn't. There's a very, very small short float out there. So that's got nothing to do with it. So there probably is something going on there. Look, it's probably the right time to have a look at Iress because, you know, as Ben said, they've kind of invested all this money over many, many years to get themselves to a point where they are this global operation. You know, it's software as a service, you know, great cash flows, great margins, and they're kind of set now to accomplish many of their pre-stated goals. They haven't been able to do a lot of those things because they've been digesting some big acquisitions over the last couple of years, and maybe we're just at the cusp. And, you know, beauty's in the eye of the beholder, so maybe a beholder is seeing some beauty there. I think with the price jump today, I mean, we need to get to a buy, hold and sell. With the price jump today, it's looking far less attractive than it did yesterday. If there was to be a bid on the table, I would think probably around about 13 is the level. You're starting to get into that sort of 30 times an average of this year through to sort of the next 2 or 3 years earnings. I don't think it could go for much more than that, given that the growth in the business is probably high single digits, low double digits. So given the jump it's had, I'm not a buyer at this price. If you had it, of course you'd hang on to it and see what you might get out of it.
Ben, does this also open up that conversation about the type of M&A activity that we've been seeing in the tech space in Australia? I mean, just recently, Hansen Technologies, Altium as well, and you could put that there's other companies that are potentially live M&A or takeover targets on the list.
Yeah, it's interesting because tech's obviously been a bit out of favour this year.
Yeah.
A lot of tech stocks are cheaper than they have been for some time. A lot of the tech companies have also had COVID issues, whereas a lot of domestic businesses have flourished under COVID. Companies like Altium, have had a hard time.
Appen as well.
Appen is another one, and Xero, have had. It hasn't turned out to be issues, but there were big concerns about the health of small business and whether they'd be able to keep going in a COVID environment. So yeah, I guess there's two commonalities here with, say, Altium. The first is the hostile intent of it. We actually spoke to Altium last night, and one thing we took away from it was you always read the unsolicited bit in the bid. This really was out of nowhere, and very little engagement with the company. The company, I think, is sort of somewhat bemused that there wasn't even a conversation about it before leaking it to the press on the Monday that they'd given them a letter on the Sunday. So, this looks like it's a similar nature. Some chest beating going on out there, and we haven't seen an M&A thing, but when you speak to guys who work in M&A, they're like, it's never been busier.
Yeah, right.
There's more to come.
Okay, so Altium, now that I've got you and you've been speaking with the chair, great time. I mean, they've knocked back that offer quite firmly.
Yeah.
I read some analysis from RBC Capital saying that perhaps they did that a little bit too swiftly, that they might not get an improved offer, and that it could be a negative. There's others that say, look, no doubt there'll be another offer coming. What's your sense?
So the sense is, from the company's point of view, they don't really want an offer. They believe that this is not a time to be selling the business. They've had some COVID issues to deal with. They're just in the process of going into the cloud, where they believe there will be a re-rating of the multiple that the market will value the business on. Autodesk were in talks for 6 months with Altium about a partnership before they changed their minds and went for M&A. It would amaze me if 6 months of talks put together the financial case for a $5 billion bid, make the bid, and then walk away. It would be unheard of. The first bid is never, or very, very rarely, the last. And the companies always normally, they never accept the first bid. It's very unusual. So
as an Altium shareholder, you're holding on for improved offer?
I actually think it's a buy at these levels, because I think, from what I understand in terms of the rationale of why Autodesk is interested in Altium, the fact that there are other players that have also been having partnership discussions, not M&A, but partnership with Altium is seen as being the dominant player in this ECAD area. And it's now trading well below the bid price, and this is a trade buyer, it's not PE or something, so it gives you a good read of where Autodesk has got a good track record of acquiring businesses. So and I think even if the transaction doesn't occur, it's a great business to own. You're paying 10% more than where it was before the bid now. Okay,
so that's a bonus buy coming from Ben for Altium. And if I just rewind to our stock of the day, Iris, that would be a hold? Yeah, a hold. Okay. Thanks for that, guys.